Welcome to the Banking with Life podcast. This is our Q&A series where I answer your questions regarding the infinite banking concept, becoming your own banker. Let's get started. Okay, here's a question. Do I have exposure to these or other private equity firms? And they mention Blackstone Group, Apollo Global Management, KKR, TPG, the Carlyle Group, another one that I don't know, EQT, Eris Management, Oak Tree Capital. I mean, you're almost listing, the dark side of the financial world. And all of those have connections to ownership. You get past all these and you look a little deeper and it's all very connected. And so the question is, do I have exposure to these or other private equity funds through my particular company's policy? I'm not going to name the companies. Where can I find the details of what my company hold? I see a repeat of the 2008 AIG financial crisis looming, and I'd like to know what level of exposure I have to those, and preferably what level of safety I have if I'm assuming that occurs. There's a whole truth about the AIG debacle that is not broadly known. Okay. And I'm not going to address all that here, but all of that was a construct that was constructed, right? Anyway, I'm not going to get into it here. And there's a reason. I mean, I want to get into it, but just needs its own time. I mean, that's a whole chapter in a book right there, the AIG debacle. And just let me say, I'll say this and I'll leave it for a later time. The AIG, it was because they were a life insurance company and had reserves. Okay. That kept things from melting down as they could have. Okay. And so to answer the question, is there exposure, to these particular, dark pools of money? My humble opinion, it's just me, my words. And I would say no. Do life insurance companies invest in the various private equity, private capital groups? And, some do, some don't. The mutual companies, most of the mutual companies, they have some exposure to private equity groups and private capital, private notes, and private loan, all that kind of stuff. And even some of them, and I can name them and support it, are absolute participants, on the same level as just another extension of the monetary system. I know. Okay. But the short answer is no. Where is it disclosed? Where can you find out what the company you actually own or considering putting your money into in the form of premium, buying policies? It's in their annual State of the Union publications. They're just publicly disclosed to their policy owners where they hold their money. Are you going to get actual line by line positions in what exactly companies and things that they invest in? No, you're not, right? Because a mutual company doesn't have to disclose at the level of publicly held companies have to disclose. And thank God. Okay. So if you have questions about your company, you should find out about them. If you don't feel good about it, if you don't think that, all the companies that you would want to practice the infinite banking concept went through the 2008 debacle, right? And came out with flying colors, most of them. Yes, there have been a couple that have been dissolved since one, Ohio National, that I'm aware of. Others were very marginal, and a marginal company was purchased by another marginal company. I'm talking about these large, reputable, 100 and something year old that have a philosophy of conservative, a conservative philosophy and conservative financially. And then I would refer you to an episode. I don't know the number, but I did the test of time. I talk about all of and it's not even a comprehensive list. As I go through a list in that episode, the test of time with life insurance companies, it's not even a complete list of all the financial shenanigans that have gone on over the last 100 years that they not only survived, but they thrived through them. Okay. So I hope that answers your question. And I appreciate you answering it or asking it, and I know that I may raise my voice from time to time, but all of this is in love. Nobody's paying me to sit down here and address these questions. And I know some of you may find them valuable and some of you may not. God bless you. I think it's a worthy effort to encourage your thinking, right? To expand your understanding of the infinite banking concept. So that's why I show up. Well, James, that's just a revenue generator for you. That's the front end of your funnel. I do not have a funnel. I don't have one. My phone number is on the website, bankingwithlife.com. If you want to contact us, you are free to contact us. There's no upsell. There's no tripwires. There's no you do this and then you do this and then it's like we're here. We're real people. 20 miles south of Fort Worth, Texas, living life, trying to have fun and do the right thing. And we are, as a matter of fact. Okay. This question is, what would be the impact on the insurance companies, especially the one I'm with, if the U.S. Treasury revalued U.S. gold reserves? Okay, this was in the form of an email, so I replied in email, and I'm just going to share with you broadly and maybe expand on the answers that I replied to the email with. My answer was, if the U.S. Treasury revalued the gold reserves, history shows that they would do so to create inflation and to confiscate private property. I don't really believe the U.S. Treasury in and of itself has the power to revalue gold reserves. That would all come through the president, the fourth branch of government that actually runs the country and what have you. But the only reason they ever do anything, in my humble opinion, is to confiscate private property, right? And it's not going to be for our benefit. There's a history of governments and their actions, right? And I'm also, I love gold. Look, gold's been on a tear. It's going to be on a tear. Silver's been on a tear. I say it's going to be on a tear. I don't know. It's going to go up. It's going to go down. It's going to go up, whatever. I like precious metals, but if you think that we're going back to the gold standard, or even the silver, the bimetal standard, you are listening to too many talking head gold bugs. My humble opinion. We are not going back to the gold standard. In my humble opinion, we are straight up going to a cashless society, and depending on how old you are, in your lifetime, and you're not going to have a choice, right? As a matter of fact, the majority of the world is going to beg for a cashless society. And I know Sweden and Denmark, they're already saying, hey, we already tried that. No, now we're encouraging cash. I'm not saying it's going to be easy and the struggle is going to be quick. That's going to be the end result of our currency system, I think, is total control, right? And I hope that I don't care how young you are, I hope it doesn't happen in your lifetime, but you're not going to have a choice. And I think that's where they're going. And then when they devalue or revalue the currency, you're not going to have a choice, right? The black market will exist. I get that. It has existed since the garden. The black market, quote unquote, the black market is always going to exist among men. So real property has a place in that. So does whiskey, tobacco, lead, the delivery system of lead, fuel, antibiotics. There's a lot of things that are going to have value and you'd be able to barter with. All right. Let me rein it in a little, Mr. Neathery. So they continue. Any impact on the available cash value? My answer to the question was no, there's no impact on the cash value. If they revalue the currency, everything that you own is going to be revalued to the new currency. So life insurance being revalued with every other asset that you own is still going to be a winner. Okay, and then, they're going to add the social credit score on there and separate you from your capital. I mean, all that's coming, but I'm not a doomsday guy. I'm an eternal optimist. Between now and then, there's a lot of life to live. And my encouragement is to get to it, enjoy it, and it's going to cost you money, right? You're going to finance it. Okay. Any impact on the solvency of a life insurance company? I say no. The marginal companies are going to become insolvent or deemed insolvent by the guarantee associations in each state because of their own activities. All right. And some of them, who knows which ones are going to become or be deemed insolvent and then either be liquidated or rehabilitated, which means every other life insurance company that's doing legal reserve life insurance company that's doing business in the state of a company that is liquidated through the state guarantee association, all of these other legal reserve life insurance companies are going to have to step in and fulfill the guarantees of the illiquid or the insolvent company. I've talked about that many times, and anyway, somewhere on our videos, I talk about what happens to a company if it becomes insolvent, right? They can't go bankrupt. So search that out. If you can't find it, let me know. I'll search it out. I'll throw all my stuff in AI sometime in an LLM, and make it searchable. I get it. Okay. This question is, I'm not sure of the impact on bonds the insurance companies are holding. Well, let me say this about bonds, and I know many of you know this. There's an inverse relationship between bond values and interest rates, right? You can't control the interest rates, neither can I, but as they raise interest rates, the bond values go down. It doesn't take much of an in-depth search to discover why that is, but it's very simplistic. So as interest rates go down, bond values go up. The problem with bonds is, does the entity holding the bonds have the ability to hold them to duration, right? If they have a 10-year bond, do they have the ability to hold it for the whole 10 years or 15 or 20-year bond? And my answer is I'm not a market prognosticator. That's a very fundamental characteristic of bonds and the inverse relationship, right, to interest rates. But all of these companies that participate or that you would want to participate with while you're becoming your own banker, all of these old mutual life insurance companies, even the holding companies. I know there's people out there that bash holding companies. Well, God bless them. It's another example of somebody's understanding of life insurance is based on someone else's misconception. Okay? These are large companies, and I don't care what accounting they're required to do, mark to market, whatever. If they can hold a bond to maturity, they're going to be fine. And if they can't hold a bond to maturity, you may not want to do business with them. Speaking of the life insurance companies. Oh, I did answer her question. Let me give you that. I say her, look at me being her, him, them. There is an inverse relationship between bond prices and interest rates. And say it here, bond values, right, which would be a price too on the market. When interest rates increase, bond values and decrease, the life insurance company has the ability and intention to hold the bonds to maturity, so there would be little effect on the solvency of a life insurance company. Okay. At least I'm being consistent, right? Okay, yeah. And it's really not hard, right? Okay. This episode is episode 273, Life Insurance Company Dividends, Part 4. Mathematically, the dividend must be larger on the base, starting lower and ending higher. Yep, that's pretty much what I said, or similar to it. And the statement is, a financial calculator will show this clearly. No, That automatically leads me to believe that you're a financial guru or life insurance agent or what have you. No, a financial calculator will not show that clearly. It absolutely will not. And that's the only reason why I'm reading or repeating this comment on here. No, a calculator will not clearly show that a dividend is higher on a PUA or a base portion of a policy. The base whole life policy, PUAs are higher. The dividends are higher on that base compared to the dividends on the PUA. No, it will not. And also, well, in that same episode, I believe I made a point, rate versus volume. All right. Okay. So go back and re-listen to that. The whole series would be my encouragement, and listen to it a couple of times. I know I talk slow, don't use proper English, but I think it's worth listening to more than one. Your financial calculator can't do it. Neither can you, sir. Right? Why not? Well, because just like an Excel spreadsheet is not going to give you an accurate outcome on a life insurance policy. You can't calculate the dividend. You don't know what the dividend is going to be in the future. Neither does a life insurance company, and they're not sharing their formulary with you. They'll give you the broad formulary that they use, but they're not going to break it down and show you the internal components of each component of their formulary. Right. It's not complicated, but it's really, I'll just leave it at that. The financial calculator will not show that, will not prove that. You may get close. You may get, well, okay, I got close whenever I said the dividend on a base is always higher than the PUA dividend. Yep. I know close only counts in horseshoes and hand grenades. I get it. The point here that I want to make is a comment like that diminishes the point. Just those fodder up there, it's, no. And I'm not a gambling man, but I would be inclined to believe not only are you a financial advisor, but you embrace the skinny base idea, right? That relatively short-term thinking. Right, the inability, therefore, to think long range. Very fundamental to the infinite banking concept per Nelson Nash. But if I wrap that up and put a bow on it, no, calculator's not going to prove that. I mean, it might support it, but it's not going to show that. Neither will an Excel spreadsheet. So if you are dependent upon an Excel spreadsheet, God bless you. They're valuable tools. I use them all day long. But if you have to use an Excel spreadsheet as part of a presentation to wrap your mind around the infinite banking concept, to pay a premium, high cash value, low, skinny, next to nothing, anti-capitalistic thinking on the base, right? It's like, because I got to have access to 100% of the money. It's like, go buy a money market fund, a high yield money market, a tax-free muni bond portfolio, and go to Canada and buy you a 100-year term, right? And then go collateralize that bond portfolio. Oh my goodness, there you are. There's the transfer of ownership, control of the banking function. Yeah, I get it. My encouragement is not to be dependent upon these financial calculators and these Excel spreadsheets and these gurus that want you to be dependent, want to prove the math to you, right? You can clearly read Nelson's book. You can get lost in the weeds on the illustrations there. Okay, but you can also understand, working with somebody that's competent, educated, and has maybe your best interest in mind, what is going on with those policies mechanically to the detail in which you wish to learn. Okay? Don't be dependent upon calculators, spreadsheets. I understand. I said a long time ago, been misquoted and abused and used and whatever, and I'm okay. I'm just sharing. If you don't understand the concept, the details do not matter. If you understand the concept, the details don't matter. Meaning that the details are your numbers And the numbers, and they're very important. They're your numbers. It's your money. So I'm not devaluing them. I'm not saying, hey, look over here, or don't look. I'm not saying that. Understand the concept. Don't be dependent upon the math of the interest rates, the dividend rate, the internal rate of return, and all of that stuff. It will be clear to you, and you can calculate all that without being dependent upon a financial guru or a particular calculator, even and including an Excel spreadsheet. Can you map everything out on that? Yes, but understand the concept. If the concept makes sense, it makes sense. If it doesn't, it doesn't. In this question, in its episode, Banking with Life webinar revisited part 3. I mean, that was originally released in 2018. We kind of re-released that because I believe the content's valuable, and I believe it's internal, and the truth is the truth, and nothing's changed, right? Except maybe, market values, interest rates, and all that. Okay. The comment, financing one's lifestyle with cash value is akin to using a line of credit. Rightfully so. You pay interest on the line to the insurance company. Very powerful strategy James is giving us. Well, I appreciate the comment, and you can make it akin, I agree, to a line of credit or credit card or whatever else, except for the inflationary aspect. All right. Because I can't borrow from the life insurance company more than I paid in and have available in cash value, and they, as a life insurance company, cannot inflate the premium that I've paid, the cash values that I have guaranteed access and control over. And thank you for listening and commenting. This is another positive comment. Jim and I want to thank you very much for the wonderful help that you've been with us all, along with the rest of the Neathery team, in setting up 17 policies for our grandchildren over the last few years. I've enjoyed our conversations about the state of things, the current environment, and your understanding and desire to leave a legacy for our kids. Thank you. These are all salt of the earth people, of course. They're saying nice things about me and us, and I'm going to say nice things about them because it's true. Man, thank you. 17 grandchildren, 17, and we've had the pleasure of helping them over the last several years. The infinite banking concept can change, at the you and me level, right? Our trajectory in our lives financially, right? But beyond our life, right? Thinking long range, beyond our children's lives and into the grandchildren. You're talking about 4 generations there. The current generation, the children, 17 policies on the 3rd generation, the beneficiaries on that 3rd generation, the beneficiaries across those 17 policies. And that's just right now. There's no telling what they do between now and the time they graduate, the 3rd generation. You're talking about the 4th and potentially the 5th generation. Man, that's powerful to me. Thank you for listening. If you have a question that you would like answered, email me at james@bankingwithlife.com. Thank you for listening. Have a great day, and we'll see you next time.